Hello, it's noon on Thursday, the 14th of December. You're tuned in to our midday newscast here on Arirang TV. Thank you, as always, for joining us. I'm Mark Brew. Our top story this afternoon, the US Central Bank, the Federal Reserve, is raising its main interest rate by 0.25% in a further step toward reversing policies put in place after the global financial crisis. The Fed said the US was posting solid economic growth and has a labour market that continues to strengthen. Park Soyun reports.
In a widely expected move, the U.S. Federal Reserve has hiked interest rates by 0.25 percentage point to 1.5%, the third rise this year. Wrapping up their two-day meeting in Washington on Wednesday, Fed policymakers cited the strong U.S. jobs market and a sharp pickup in household and business spending for its decision, despite inflation remaining below its 2% target.
The U.S. economy is performing well. The growth that we're seeing, it's not based on, for example, an unsustainable buildup of debt as we had in the run-up to the financial crisis. I think the risks are balanced, and there's less to lose sleep about now than has been true for quite some time.
Sticking with its previous forecast, the Fed also said it still expects to raise rates 3 more times in 2018. The majority of policymakers also agreed that U.S. rates will likely top 2% within the next 12 months. In addition, Fed policymakers hiked their economic growth forecast for this year and the next to 2.5%. The 2018 forecast far exceeds the Fed's previous forecast of 2.1% estimate published just 3 months ago. President Trump, who is close to pushing through his $1.5 trillion tax package, says it will be paid for by economic growth of around 4%, a forecast Fed Chair Janet Yellen said would be challenging. The rate hike is Yellen's final major act as Fed Chair, as she will be replaced by Jerome Powell in February. The Fed's rate increase means U.S. rates are now level with the benchmark rate in South Korea. Park So-yeon, Arirang News.